time to trade as well. So the best time is actually during the overlap between the London and the New York session. That's where you have the most volatility. That's where the markets are moving, in the best way for you to find the setups that you need in order for you to start making some money in the markets. Now, let's talk about some common trading strategies. So later on, we're going to go into a bit more detail on these strategies and how they work, but I just wanted to give you a little bit of an insight to what these strategies are, and then we'll go into which one will work for you and then go into the details of that as well. So the first one is trend trading, which is probably the most common trading strategy that people use, and that's trading in the direction of the market trend using indicators like moving averages. If you don't know what moving averages is, it's an indicator that you guys can use on your charts when you're doing your markups. But again, we will show you how to use this in later sessions as well. Then we have breakout trading. So this is when you're entering trades when price breaks key levels of support and resistance. And of course, support or resistance, once again, is another technical term that you will use for technical analysis. We have range trading as well. So identifying price channels and trading within them. So you know where your highs and your lows are, and then you can find trade setups in between. And then, of course, news trading as well. So this is also quite popular because it's not as frequent as, let's say, technical analysis, for example. You can, watch out for the major two news events that will happen once or twice a month, and you can trade on just those. And if you trade it properly, you can make some very good money as well. So that's trading, around major economic releases like NFP, for example, interest rates and CPI as well. It's a very, very good time for you to get into the market and trade. But of course, it's super risky because you have to know what you're looking for in the news. If you just go in blindly and trade on those days, the market behaves very abnormally. But if you know what you're looking for, if you understand how to read the news, then you'll be able to do this very, very easily. Now, let's also talk about risk management, because this in itself is also a very, very important topic. So before you get to actually learning the charts, before you get to learning your technical analysis, before you even get to trading yourself as well, it's very important that you understand how risk management works. So when it comes to risk management, there are just certain basic risk parameters that we can share with you. But of course, as you develop your own strategy, as you develop and understand more about the markets, you can always adjust your risk management strategy according to what's best for you. So in this example, let's just say, for example, your risk to reward ratio should always be 1 to 2. This way, you're risking $100 to make $200. You don't want to do it the opposite way around because it doesn't make sense. But in this way, you're just risking $100 to make $200 if you do risk 1 to 2. And position sizing as well. Now, this is very, very important. When you guys understand how lot sizes work, you will know that it's a very important part of your risk management. What you don't want to do is risk more than 1 to 2% of your account per trade. So when we get deeper into the trading side of things, it will make more sense. But the whole purpose of this is you don't want to over leverage your account. You don't want to have big trades open, because if they do go against you, then you're taking big losses on your accounts, and you want to avoid that. So using a smaller position sizing, 1 to 2% risk management on each trade, it will be the best way for you to start at least, and then you can start to adjust your strategy from there. Your stop loss and take profit, this is essential. Do not ever trade without having a stop loss or a take profit, because you want to make sure that once you've hit the targets that you're going for, the trade will automatically close out by itself. Even if it's going in a loss, you don't want it to go over your risk parameter, so you put your stop loss in. And when it goes to taking profit, you want to make sure that it's in a position where it's hit your target, and then you want to get out of the market. You don't want to fall for greed. That's something that can happen very easily when you're trading, and we'll talk about that in just a moment. And again, you want to avoid over leveraging. So a lot of brokers will give you, high leverages on your account, 1 to 500, for example, or 1 to 300, etc. There's all sorts of different brokers out there that will offer this, but just know high leverage can help you make more profits, but it can also make your losses bigger as well. It's the same concept that works on both sides, because a lot of people go for over leveraged accounts thinking that they're going to make more profits, which in theory is true. If you do make profit, then of course you get more amount because you're leveraging more, but then it also works going the other way as well. So if you take a loss, your loss will be bigger because you're over leveraging on the account. And last but not least, something that we're going to be doing a lot, especially throughout this mini series, is using demo accounts. So you'll be able to basically practice before you start trading real funds. And this is also extremely important, because what you don't want to do is just start putting money in there, going into the markets and trading blindly. You want to find a strategy that's working. You want to test it on a demo account, test it again and again, back test it as well, see what create all the possible scenarios you can out of this strategy that you've developed, and then you can take it on to real money once you build up your confidence. But just putting money in straight away and starting to trade when you don't really know what you're doing is not a great idea, because that's how you lose money. So we're going to be doing a lot of practicing on demo accounts, perfecting your strategies, and then you can implement it as well. And it's really not as difficult as people think. Everyone makes forex trading sound, extremely complicated, but it's really not. You can make this simple. Of course, there's a lot to learn. There's a lot of information. That is true, but it's not really difficult to get your head around it and create a strategy that can work for you. So now let's move on to the next slide now, where we're going to be talking about something equally as important, which is your trading psychology and your emotions. Because if you do not know how to manage your emotions, or if mentally you're not strong to be trading, then it could be very, very bad for you, in the sense of, if you cannot control your emotions, you'll make a lot of bad decisions. If you cannot control your greed, again, you will make a lot of bad decisions. So this is why it's very, very important to train your mindset, be strong in the way that you're thinking, and also be able to manage your emotions. So the first thing is, and this is the most common thing, that's why it's on the top of the list, is fear and greed. So emotional trading is what leads to bad decisions. And I'll give you an example of something that I've done myself in the past, and I know many other people have done. So let's say, for example, I've taken a trade and the trade's taken a loss. Let's say, for example, it's taken a $50 loss. Right now, emotional trading kicks in, because now that I've lost $50, I am not happy about that. I want to make that $50 back. So now I'm going to be looking for opportunities in the market, not based on the strategy, but based on my emotions that I need to recover that $50. And 9 times out of 10, what happens is, when you're emotionally trading to recover that $50, you end up losing more. Now you're down $100, then you're down $150. And then that's how your emotions, get the best of you when it comes to trading. And the same, when it comes to the greed aspect as well. And the same can be applied when it comes to fear. If you find a good setup, right? You have a good setup, you have a good opportunity where you know you can enter into the market. It's ticked all of your strategy requirements, all of the parameters have been ticked. This is a good setup for you to get involved. But because of fear, the fear of losing the trade, you don't enter. And just like that, you can miss out on so many different opportunities. Like you can enter a trade late because you had fear when you should have entered at the right time, but you entered late, so you don't make as much profit. Then you're trying to recoup the profit that you lost out on, so it gets worse, and you don't want to keep going down that lane. So that's why it's very, very important to manage your emotions, number one, and also be strong, have a strong mindset when it comes to trading. If you take a loss, it's perfectly fine. Switch the laptop off, switch the computer off, go for a walk, recalibrate, and come back and go again. So that's something that, took me a little while to understand and learn, but once I did understand, it was very, very beneficial for me. Now, patience and discipline as well. So sticking to your trading plan is key. And again, the reason why I say we're going to take our time to find a strategy that works, because when you have a strategy that is working, something that you've tested, you have a key to making money in the forex market every single time. It all comes down to finding that strategy, right? So when you find the strategy and you've gone into the market, you have a winning setup. So when you have that winning setup, you need to be able to have the patience and the discipline to stick to it. Especially if you're on a good run and you're making a lot of profits, you get confident. And when you get confident, you start to go outside of your trading plan. And when that starts to happen is when you start to lose. So if your target for the day is to make 5%, let's just say, right, which is extremely high, but I'm just giving as an example, right? Let's say your target for today was 5% and you achieved 5%. If that is what is a part of your trading plan, then after you've achieved that 5%, you should switch off straight away, and that's it, you're done for the day. But whereas if you are not patient, or if you're not disciplined, most importantly, if you don't have the discipline to stick to your trading plan, then what's going to happen is you're going to continue trading, and then that's where you're going to take losses, and the emotional side will kick in as well, which will lead to emotional trading, and now you're taking bigger losses. So you see how even the smallest thing can have a trickle down effect if you're not strong on your mindset when it comes to trading. And of course, the fear of missing out, this is with everything, but it also exists in trading as well. What you're going to start to see is when you get into trading yourself, you're going to notice that all of a sudden on your social media now, you're seeing a lot more traders, you're seeing a lot more people that are, actively trading in the markets. And someone might have a trade that they've made profit from, and you're like, oh, if this guy made profit, I can do it as well. So let me go and try and make the profit too. Now, when you do that, you're chasing other people's trades, right? Just because someone else did it doesn't doesn't mean that you also have to do it too. You have your own strategy, just stick to that. And as long as you are hitting your targets, you will hit your financial goals at the end of every month, right? That is the focus. So especially this fear of missing out because you might see someone else has made a lot more profit than you have in the day, for example, doesn't mean that you need to jump back onto the markets in order for you to do the same. And over trading and mindset, now these two are very, very important as well. So over trading, again, you don't need to be trading 24/7, right? This is something that a lot of people think what trading is, that you just sit behind a computer 24 hours a day. That's not true necessarily. If you're learning, it's different. But when you're actually trading, then you don't need to be behind a computer. You find your setups, you follow your strategy, and then you let the trades take care of itself. You have your stop loss and your take profit already entered, so you know what the best case scenario will be or what the worst case scenario will be. So there's no need to overtrade. As long as you follow your strategy, you'll be fine. But especially in the beginning, as you're learning, you want to try out a lot of things as well. That's why we have the demo account, because you can try there as much as you want without having to lose any funds. And of course, last but not least, a mindset. So treat trading as a business, not as gambling, because a lot of people look at Forex and think, oh, it's just like gambling. You're either going to win or you're going to lose. That is correct. You either are going to win or you are going to lose. But if you approach it with a business mindset, that you will know that there is a strategy and there is an option that you can bring to the table that's going to allow you to find winning setup. So it's not gambling where you're just kind of going in there blindly. You're doing your research, you're doing your analysis, you're finding trading setups that are going to help you inside the market. So that increases your chances of having winning trades. It doesn't guarantee it, but it increases the chances of you finding winning trades. And that is not gambling. So if you think of it from that mindset, you will definitely find ways to be profitable inside the Forex market. So that's everything for today's session. I hope you guys were able to enjoy this. Next week, we'll be back with episode 3, where we're going to start going into a little bit more details of the different strategies we can use and then start breaking down some charts together as well. So thank you very much, guys, and I'll see you all next week. Take care and bye-bye.